Welcome back to Accrued Interest. Today, March 7, 2025, I'm doing part 2 in an ongoing series called How Short Sellers Lie on AppLovin's. First, let me say the usual disclaimers. Everything said on this podcast is for entertainment purposes, as I am not a registered advisor. I did a follow-up to my first video because it felt like the shorts were just really getting out of hand with the lies and misinformation they're putting out about the company. The stock has fallen a lot this week, but a lot of that could be contributed to sell-offs from the broader tech sector and broader macroeconomic fears. But unfortunately, you have to admit, the short sellers have been successful in scaring shareholders and making some question whether or not the company is fraudulent. In a prior video, I explained that short sellers have been using what's known as a flood the zone strategy. They have about 4 or 5 big, scary, salacious claims, and they just keep repeating them over and over and over again. Doesn't matter if they're contradictory or not, or if they don't make sense. There have been 4 main short sellers who have written reports that have been disseminated on AppLovin's. I'm not going to name every single one of them individually, but in this video, I'm going to give an amalgamation of their concerns and rebut them one by one. Fortunately, this is pretty easy because most of them copy each other's work. I have my Columbia Value Investing hoodie on today because we're going to go back to school. Let's go over some of the short sellers' accounting mistakes. First off, the short sellers have claimed that AppLovin's has weak free cash flow. If you're watching this on YouTube, I took a screenshot of a poor excuse for an income and cash flow statement that one of the short sellers put in their report. They claim that there is a gap that somehow can't be bridged between the company's net income, their low taxes paid in 2024, and the amount of cash that grew on the balance sheet. They claim that AppLovin's financial leverage is rising and that they actually are not a true cash generator. To that, I have to ask, are we sure the short sellers actually know accounting? Do they actually know how to read a 10K? Because when I was TAing freshmen, we went over the 3 financial statements. You start with the income statement, then you work your way through the cash flow statement, and then you settle up all the changes, and that results in how much cash ends up on the balance sheet. What the short sellers have done with this first table is really dishonest because they completely cut the cash flow statement out of the equation. They try to bridge the income statement to the balance sheet, and that's just a rookie mistake. Next, the shorts have claimed financial distress, that AppLovin's is having a difficult time paying its customers. They claim that rising DSO shows signs of financial distress. I clipped another piece from the report here where they quite arbitrarily compare AppLovin's change in DSO to Meta and Google. I don't know if the short sellers actually know how to use sales ratios. The reason why many people use DSO, which stands for Days Sales Outstanding, is usually to get a sense in terms of how well a company is at managing its working capital. This comparison is far less relevant for digital companies because they don't have any physical goods. Measuring how long it takes for sales to turn into receipts is something that's much more relevant when you're dealing with items that are kept in storage, such as a retailer or consumer good product. So off the bat, this is the wrong analysis to use, and this is not where you would even look. Thirdly, the shorts claim that somehow AppLovin's is illegally avoiding taxes. In one of the reports, the short seller posted this picture of the income tax statement from the latest 10K with an arrow that said yikes. I don't know about you, but I don't know what sort of accounting term yikes is. Just pointing red arrows to something doesn't mean that you're Sherlock Holmes. What they're trying to insinuate is that AppLovin's is somehow doing some shady shell game where they're putting more of the taxable profit on their foreign subsidiaries and not within the US. What you need to know is that revenue is recognized in the geography where the customer sits. About 40% of their revenue comes from outside the US. That's because many game developers, as well as other customers, are all over the world. Now, costs, on the other hand, are recognized in the geography where they occur. If you're watching on YouTube, I put a table here that bridges net income from the 10K to EBITDA. And what I wanted to show you here is everything that goes in between net income, and EBITDA. Costs such as interest, depreciation, amortization, all these different costs are located in the US. So if you add it up and take it together, it makes sense that the US is going to have less taxable income than they do on the foreign subsidiaries. Also, the shorts claim that AppLovin is under financial distress because they are letting go headcount, and that while revenue is strong and growing and profits are expanding, shouldn't they be raising their headcount? Again, this claim by the shorts doesn't make any sense. Ironically, they're sort of making the bull case for us. AppLovin should be applauded for wise capital allocation because AppLovin is one of the rare tech companies that did not overstaff during the boom years during COVID times. Since they didn't overstaff, they didn't have to do draconian cuts. If you actually read some of the transcripts, the company has been very clear that their model is asset light. They use a lot of automation and AI, and going forward, they should be able to keep growing substantially with modest additions to headcount. Lastly, and this is the allegation by the shorts that upsets me the most, is the short reports are full of different allegations that different company employees are basically foreign assets. Yes, I know, this makes no sense whatsoever. I'm not going to call these people out by name, but some of the short sellers have taken screenshots of different employees and their LinkedIns and try to make shady connections, whether or not they're from Russia, or the short sellers have said that because the CEO of AppLovin is of Iranian descent, that he somehow isn't trustworthy. If you see a short saying this, just stop right there. We don't need to resort to false allegations based on someone's country of origin. The facts should speak for themselves. So in conclusion, this week, it looks like the shorts might have scored a short-term victory. The stock has sold off first on a broader tech sell-off this week, as many people have tried to take risk off. But also, sometimes stocks fall because they went up too quickly. AppLovin became a hedge fund darling. So at the first sign of trouble in the waters, the selling became a virtuous cycle and caused the stock to be down over 30% over the last week. My advice to you here at Accrued Interest is to focus on the fundamentals. The fundamentals of AppLovin are still strong. Nothing has actually changed since the company reported earnings a couple weeks ago. And if anything, there's more evidence that the company's e-commerce rollout is actually accelerating. I'll remind you to a prior video I did where in the CEO's defense letter that he put out against the shorts, he disclosed for the first time that AppLovin was able to generate on a run rate basis about $1 billion of gross advertising spend only from 600 customers during the December e-commerce pilot. If you go on Twitter, you can see lots of different DTC advertisers have been sharing their success stories. And lastly, even if you disagree with everything I say on this video, I don't think you want to be short AppLovin going to the weekend because after the bell closes today, Friday, there's a reasonable chance that AppLovin gets added to the S&P 500. With that, thank you for listening. If you enjoyed this, don't forget to like and subscribe to the channel. I just want to point out on my YouTube page, I'm creating curated playlists by company. So if you only want to hear my thoughts on AppLovin, Uber, or any one stock in particular, all the research is right there for you. Have a great weekend.